Hey everybody, welcome back to another edition of the weekly stock market update. Today is the 18th of August, 2023. Glad you're here. Tough market out there right now. There's a lot of sky is falling people on CNBC telling you that, this is the beginning of the crash and all that stuff. And I don't think it feels that bad to me. I think we're in the middle of a bear market, a bull market with a little bit of a healthy correction. Doesn't feel healthy if you're in it though, I got to say. But let's talk about what we've got going on. Let me do this here. Hopefully you can see that. Okay. All right. So we can see the NASDAQ. Look at the NASDAQ. Predominantly red on a downtrend, right? So you can see it made a high 3-4 weeks ago. It kind of tested that high-ish, and then it's just basically been selling off daily after that. Now, this is a scary looking sell-off. It dropped down through the 8-day, the 21-day, the 50-day, and it's now headed maybe for that 200-day moving average, that black line. I don't know if it's going to get there. It seems pretty high, and I think it might stick around here as it kind of tries to find its little bottom here, which could be right now. I don't know. But we went red a few days ago, and, we've been red for a while. The S&P 500 looks exactly the same, right? There's a major sell-off going on. And it's a sell-off that's not in huge volume, by the way. Looking at those volume bars on the bottom, they're high, but they're not incredibly high. So you've got to remember that. And by the way, this is a triple witching Friday, so there's a lot of expirations of options and futures going on today. So you're going to see a lot more volume on this Friday than most other Fridays. The Dow Jones Industrial Average looks a little bit healthier. It's down below the 50, but it made a nice little technical bounce, trying to make like a little mini hammer candle in there. And I'll show you why in just a second, but this one looks a little bit healthier than the other ones, which is fine. It is the Dow. Same thing with the New York Stock Exchange Composite, although that one's a little closer to the 200-day moving average. So it could go down and test that, next week. We'll see. All right. The CBOE Volatility Index, the VIX, is up markedly, right? We've been listening for the last few weeks. I've been like, wow, things are really low. They're below the 50. Not anymore, right? We had a spike up. This is the panic index. So people are panicking a little. Money's coming out of the market. Maybe because the Fed said this, maybe anticipation. Could the Fed said that, that they're going to keep rates the same or maybe even continue raising? That freaks people out a little bit. And so there's a little bit of panic in the market. So that's why the VIX is up. And it is a reversion to the mean indicator. So it has reverted to the 200-day moving average. And, you can see looking back, it doesn't really spike too much over that. So that might be it, unless there's huge amounts of volume or news. All right. The Dow Jones Transportation Average colors the Dow Jones Industrial Average. So if the goods are moving around the country, then that's good for the Dow. Goods stop moving around the country, and we had a bankruptcy with Yellow Transport last week. That's trouble for the transportation industry, right? And if the transportation industry is not moving things around, that's trouble for the market. And so that's what this is reflecting. The transportation industry coming on almost to the penny, testing the 50-day moving average, bouncing back up almost to the penny right now where it is. So that's interesting, something to watch for sure. The gold bugs, don't listen to all these people that are like, oh, gold's going to go to 5,000. It's like at $1,800 right now. And this has been a weak market in gold. It's gone from 280 down to below 220, around 215. That's a pretty big sell-off for something that's supposed to be like the next holy grail. And I suspect that's because the dollar is pretty strong. Dollar's at a 2-month high right now, making other things a little bit weak. It's the way it goes. But I talked to you last week about the treasury market. And this treasury market, I can't figure out. The only thing I can tell you is that there's problems with this market. A couple 3 weeks ago, we had 3 gap down days in a row on volume. We've got selling going on. The interest rates are going up, which means prices of bonds are going to go down. And this thing wants to go down and test that 91.85. Now, several months ago, this thing was at 180, and now it's at 91. It's cut almost in half. Big, big, big correction in the treasuries. I wouldn't touch treasuries with anybody's money, so just be careful. Tesla is continuing its downward slide. It probably wants to go down and test that 200-day moving average at around 200. And there's a lot of down days in a row since it had numbers, and it gapped down on energy a couple of weeks ago, 3 weeks ago, and it's just been selling off ever since. Got about a 25% correction going on right now. Pretty rough if you're in Tesla. Apple, same thing, even worse, actually, in my opinion. Just the chart looks worse. It gapped down below the 50 on earnings, on volume, and it's continuing to head lower. Tried to save itself today at the 174 level, but it's you know, they're coming out with a new iPhone 15. Whether the street likes it or not, we don't know, but that's next month. We'll see what happens to Apple. I think if you're a long-term player, Apple's probably fine. All right, that's probably enough bad news. Let's go out and have a really great weekend. We've got we've got another week left in this market, and hopefully in this month, and hopefully you guys are having a great weekend and getting ready to spend some quality time. There's bigger things that are out there than the market, although the market is important, especially when it's going down. It feels a little bit different. Anyway, great to see you. Look forward to seeing you back here on another weekly stock market update next week. Take care. Bye.